Right, this brings us to our final keynote of the day. We are almost at the conclusion of the Point 2016, but before we get there, this presentation is about looking at the big picture and rounds out our theme of taking payments to the next level. Now, we've heard from the public that a lot of them out on the street had never heard of blockchain, but as it turns out, it is a bit of a buzzword on many people's lips, and many companies are devoting resources to the emerging platform. IBM has a blockchain business development leader for Australia and New Zealand. His name is Michael Aaron, and I'd like you to give him a warm welcome.
Thank you very much, and thanks very much to Payments New Zealand, and especially Steve Wiggins for having allowed IBM to have this sweet spot in your agenda today, because I'm the lucky guy who gets to follow on after everybody else who said all the really cool stuff, told all the great jokes, right, got everybody interested. So what I'm going to try to do, without having seen anybody's material in advance, is try to pull those threads together for a call to action. So let's see if it works. So firstly, some people have been in payments 25 years, whatever, 30 years. I've been in payments 35 years. So I wonder what I did wrong as a boy, right? There must have been something. But the good news is payments is finally fashionable. The last 5 years, thanks to our friends at VocalLink, thanks to the new technologies, it's actually fashionable to be in payments, which is why I call it the new black. Okay? It used to mean black in the sense that you were black from all the ink on those checks when you were doing all that encoding down in those basements 35 years ago. Now it means it's fashionable. And why is it fashionable? Because it was become obviously attractive to the big digital brands and the fintechs who saw profit pools and revenue pools which were being treated as cost centers by banks. So they said, well, if they don't want to make money out of it, I'm perfectly happy to go in there and make money out of it. Why not? And that's how you saw a whole bunch of these new fintechs come up. Square, you saw Tyro, Swipe, they're all coming, and you've seen huge lists of all of these people, right? And you don't need to have a banking license. So you can cream off some very nice non-interest income by getting into the payments business without having to get a banking license and put any capital down, right? Or go through all of those hassles of risk management and everything else. So the next thing is that under the new supervision routines in most countries, the regimes, you actually need deposits, right, to fund loans. So I work in Australia, that's where I've worked my whole professional life. And of course, the four major banks, no offense to anybody, are basically large building societies who live off of mortgages, right? And so they treat their payments business as an adjunct to that to get deposits to do the funding. But now we have Basel 3/4 type of regulation, which means I have to have a higher percentage of my funding come from retail deposits, which is pretty serious stuff, and I have liquidity ratios for the first time in years, both of which come from what? Deposits. So therefore, I want to go out and get deposits, and on what basis do people choose to have deposits with you as a financial institution? Interest rates, of course, right? We shop around, but more importantly now, payments. Why did ANZ break ranks and sign up with Apple Pay? To get deposits from millennials. Why did they quickly follow with Android Pay? To get deposits. It's all about deposits. So think of the nexus between payments and deposits. Do you want deposits? Does anybody here not want deposits? Right? This is what it's all about right now, so that you can do those loans without having to go in the wholesale markets, without having to do everything through CDOs and CSDs. The other reason to get interested in payments and therefore deposits is because the one lifetime relationship a financial institution has is the deposit account where you get paid, either your salary or benefits or birthday presents from your maiden aunt or whatever it happens to be. So the bank actually sees you as a deposit account, not necessarily as a credit card account or a mortgage account. Would anybody dispute that? And so if you look at people that way, you want their deposits, as in many countries, by grabbing them when they're, say, 8 years old, 9 years old, with school banking, train them to do deposits into your bank, and then, lo and behold, they become the customer over time throughout their life cycle. Now, the reality is today, as I think you've seen, payments is yours to lose, or at least the customer interface. So what do we want to talk about? 4 things. 4 transformation levers, I like to call them, or IBM does. We all work together on this. Superior customer experiences is number one. Number two is how do you enable the convergence of payments? And I'll talk about what payments convergence means. Three, how do you gain insights into your customers through payments analytics? And last but not least, understanding how you position for the ecosystem change in payments. So you can see I'm going to try to draw a lot of threads together, especially from today's presentations. So first of all, were you blown away by that Alipay presentation? Unbelievable apps, right? Do I have to say any more about how important the digital interface is now in modern banking? Do you have interfaces as good as theirs? Do you have interfaces as good as the ones from Voca for the UK? Pretty impressive, and it's not just simple stuff. It is a true application. Now, the challenge I'll put forward to you is not only do you have to be able to design that and be able to do that, you also need to be able to do it across multiple channels. No customers only interact on one channel, and I seriously doubt that everybody's going to give up all the other channels. There'll be no more laptops, there'll be no more pads, there'll still be people calling you on the telephone, so you're going to need to understand how can I have a consistent omni-channel experience. And omni-channel means not only do I have multiple channels, but it means I might have to do stuff across channels and keep a long-running transaction going across multiple channels, even in payments. Particularly true when I get into small and medium enterprises or institutional. The other thing is I'm going to position now is smartphone applications are client-server applications, right? It is a user interface. It has to talk to something to provide any value. And many studies on user experience have demonstrated that simply having a really cool interface with great graphics that cannot tell you if the payment actually executed, when did it execute, who the counterparty was, et cetera, are not actually good applications. Cool to use, but most applications, I've read numbers like 85% are only used once because they simply do not fulfill. They're cool looking, but they do not fulfill the actual experience the customer wants, which is the effective completion of the transaction which they initiated with their financial services institution. So we then want to move on. Oh, client server. So we're going to have to start talking about the other side of the equation. So first thing we need to do is consider what convergence means. I first started talking about convergence 8 years ago, okay? And like everything in IT and banking, it takes at least 8 years for anything to really come to the fore because we're all methodical thinkers who think things through and look for the right opportunities when to get things done. So what we're seeing now for the first time, and we do have one exception, we are seeing the merger of what used to be called wholesale payments and retail payments into one thing called electronic payments. All right? The second thing we're seeing is that most payments now are becoming account-based debit instruments. The only token instruments currently in use are currency and coin. That's the stuff in your pocket that probably half of you don't even use anymore. And things like Bitcoin. However, Bitcoin and other cryptocurrencies are not going to take the place for the normal person, in my view at least, of currency and coin, much less anything else. What it's going to be is dematerialized payments in your account, which is what we're all getting used to now, which means the account becomes the center of the payment. And the account is held by whom? The banks, one hopes, right? Secondly, we're going to want to be able to execute payment instructions to initiate payments through any device. And we're going to want to have the same interface as well. So think about small and medium enterprises or corporate institutional customers who have to sign on to different applications to use different payment types. People don't want to do that. People want to go into one consistent interface, be able to choose what payment type they're going to use, whether they are a retail customer, a small and medium enterprise customer, or a corporate institutional customer. And often we forget about the SMEs and the corporate institutional customers when we talk at conferences like this, and yet they're the ones who actually generate fee income for us as bankers, right? So we want to think about that hard. The next thing that's converging is messaging. You heard today from Voca that 8583, which is the old standard for credit cards and debit cards, is now going to merge into ISO 20022. It's already starting to happen. NPP is about establishing ISO 20022 in Australia as the standard. It is happening everywhere where VOCA is going. It is going to happen everywhere where SWIFT is going to go. So it's very important to start understanding how are you going to use ISO 20022, and the next chart will have a little discussion about that. Because we're going to merge and converge payments, that means we can have a single common platform and set of processes. This is very important when we start talking about rationalization of payments and cutting costs as well as enabling new offerings. And last but not least, we have the opportunity for the first time to gather an enormous amount of data because I've integrated all of my payments into one place. I can grab the data from all payments types to start to form pictures of my customers in various ways, and customers meaning retail customers, merchants, because merchant acquiring is always a very good fee income business, as well as the SMEs and the larger customers. So when it comes to ISO 20022, it is clearly going to be the mechanism by which people communicate external to the bank. And ISO 20022 is used for a lot of other things than just faster payments, right? So it's used for a lot of securities processing. In Australia, variations are being used for superstream and what's called e-conveyancing. So what we're going to see is effectively the death knell of ISO 8583, not too soon, but also AS 2805 in Australia, which was the first instantiation before ISO 8583. So all those investments are now going to move as banks move and regulators to ISO 20022. So the question becomes, if you're going to use it external to the bank, are you going to use it internally as your canonical message format within your new architecture that you will be building to handle all of this? And this is an open question. Not everybody is going to use ISO 20022 for internal purposes, which means you'll have to have translators at both ends, which is not a big deal, but do you want to do that? And you heard VocalLink talk about how they provide a translator for some of their customers so that they can go between the different formats. However, that's more friction in the system. So this means that we now can look at a converged payments value chain, which is both retail and wholesale in old-fashioned terms. This is clearly not a real value chain. This is what's called marketecture. A real value chain has at least 8, if not 10 steps in it for payments, right? And sometimes even more. But this is enough to fit on a page to give us the idea that we are going to converge and have the same identification and authentication, the same looking at whether or not there's credit or funds availability. Restricted party access, processing, and settlement will be the same processes regardless of the payment instrument or the segment with which you're engaging. So what we suggest is now is the time for systems-oriented architecture to be instantiated in your payments business so that you have one set of rails, which is those processes up there, which then have breakout points for all the necessary additional functions that you need depending on payment type. You clearly do not have to run OFAC filters for retail payments, domestic payments, but you certainly do for cross-border payments, right? Understand tables of denial and all that wonderful stuff at the high end. So what we're suggesting is we're going to build up a marketecture here where you have an integrated cross-channel, omni-channel interface, right, which is of the highest quality. It then connects up to, using ISO 20022, an enterprise services bus or an SOA set of processes that enable you to get that wonderful flow through your bank quickly to give the necessary user experience for that payment through to settlement, right? So everything's nice and neatly in the counterparty's accounts. Now, having gotten that architecture in place, I now have access to all sorts of data that I couldn't get before. Now, we always hear about all the big data and all that kind of stuff, right? And how I can go off to Facebook and Twitter and get all these great feeds from social media. Let's not forget that the most important information about a customer already sits inside your institution, which is to say payments data. Now, here's just a high-level view. Let's take a look at the 4. So the things you can find out from payments data is where do they spend money, okay? Now, it's awfully nice if you can actually tell that to your merchants. Did you know that the majority of my cardholders spend their money at this time of day at these merchants buying these sorts of things? It enables you to understand where people are in their life cycle and do segmentation. Like, how do they spend their money? Therefore, you can figure out what kind of products and services do you want to be offering in the future, and what do you target in your marketing campaigns. When do they spend their money? Do they spend their money on the weekends mostly? Do they spend it during the day? When are you going to allocate your resources? When are you going to help your merchants and the other people who are receiving the payments have the capability to take those payments or process those payments when the customer wants to do it and the merchant wants to do it? And last but not least, what are they buying? This is really important to understand life cycle. Where a customer is in their life cycle, clearly if I'm buying a lot of nappies, I probably have a baby at home, right? If I'm buying a Zimmerman frame, I'm probably either have an elderly person at home or I am an elderly person. And this can help you understand and the customer, if you really want to build up the profile so that you can make pointed value propositions based on who they really are, you don't guess, you learn from payments data. So we build up this interesting architecture now because we can add in the payments analytics. And we can use modern technologies like cognitive computing, which IBM calls Watson, as a brand, and we can start doing things we're going to have to do anyway. We're going to need inline real-time fraud detection. That's one of the downsides of immediate payments or real-time payments. You're going to have to do real-time fraud detection across all payment types. The second thing is you're going to have to do anti-money laundering across all payment types in real time. As we move towards real time, is the regulator going to say, oh, I know it's very hard to do fraud detection real time because you're doing immediate payments, so we'll give you a free pass? Don't have to do any money laundering anymore? Somehow I don't think so. So we're all going to have to figure out how are we going to do that on the fly. Much more interesting than the way we do it now, of course, right? So we're going to need some more technology potentially to be able to do that. And we're going to have to do real-time liquidity management, because one thing wasn't discussed when we talked about this morning about UK faster payments is you have to do liquidity management too. Do you have the money at 4 o'clock in the afternoon to satisfy all those payment requests, especially in a place like Australia where they're having real-time settlement? So you actually have RTGS for the masses in NPP is what you have. So you actually going to have to allocate liquidity 7 by 24, and does that mean treasury operations are going to have to run 7 by 24? These are questions which you're all going to need to ask as you move forward, because the odds are you're going to have to find a way to manage liquidity and counterparty risk 7 by 24 in a near real-time environment, regardless of segment type, which is going to create challenges for everyone, which we think, of course, can be addressed. Otherwise, I wouldn't scare you to death, right? The fourth area is if we sort out the interface between the customer, we sort out the processes to feed that so that the customer has the user experience, we are able to gather the data to improve the customer experience and our own business. The last thing we need to do is take that automation outside of our financial institution into the marketplaces which naturally exist, which banks sit in. Okay? And you can see these are called business networks, because the reason banks exist is to facilitate trade and commerce between different businesses, as well from in terms of capital and in terms of payments. And there's 2 areas I'd like you to consider right now. The first is e-marketplaces. Many banks offer seller-centric offerings. Others have buyer-centric offerings, because you have customers that are basically sellers or customers that are buyers. Very rarely do you have customers that are both, and with you as a financial institution on both sides of the transaction, because that's all about market share. So there is a bank in Australia that has approximately 35% market share of both retail cardholders and merchants, which means they see both sides of the transactions for 1/3 of the population of Australia, with which they create metadata, which they use to analyze their own business and make offerings, and they on-sell to their merchant acquiring customers as a business, because they can see both sides. Now, what we can see coming is marketplaces where banks band together with fintechs. I actually put a fintech logo in there, which has mountains in the background, so it looks like New Zealand, I hope, because we want to have fintechs involved bringing their value add, like Xero is a great example of that. And this is what you heard called the open API economy or open data. So you want the ability to participate with other banks to create these marketplaces so people can buy and sell products. And you will most likely leverage fintechs to do that. And there's actually a whole program going on in Australia right now, which I'm sure many of you are aware of, on the open API economy and how the Australian banks are actually going to make that happen in practice to everyone's benefit, especially themselves, of course. The other way to do it is blockchain. Heard a lot about blockchain. I almost don't want to talk about blockchain now, right? Because I've heard a whole bunch of stuff that I don't necessarily agree with. But the first thing is, I love this picture. It's a simple picture because what it basically says is instead of having 4 different ledgers, I wind up having one ledger that's shared. That's what's happening. In a business network where a bunch of people have to have a view of financial data which is in common. Now I'll give you some practical examples. We use it internally. IBM decided we're going to try blockchain ourselves. It's one thing to tell everybody else to use it. Let's see what we can do with it, right? So IBM, amazingly enough, buys a lot of stuff, right? Because we sell hardware, we have business, requirements, toilet paper, pens, pencils, servers, all of that. Hundreds of millions of dollars. And we provide commercial finance through our leasing company, IBM Global Finance, as many companies do. We had, on average, $100 million in dispute with our suppliers. $100 million US. 44 days to resolve. Average, somebody's smiling over here, average amount was $5,000 odd. Now, this is a real drag, and it all boils down to asymmetry of information or not having access to the same information. So what we did was we used our own stuff and we made a shadow of our ledger, just a shadow, a permissioned private ledger. And every supplier could see their part of this common ledger, nobody else's. Disputes are now resolved in less than 1 day. The value has gone down. Okay, we can't talk about how much because it's commercial in confidence, it's significant. Simply because everybody could see the common terms and conditions of our business arrangement. Yes, it's 15 days or 5%. You will deliver to Hoboken, New Jersey docks at this time. You will pay this import duty. You will use this freight forwarder, blah, blah, blah. No room for disagreements. A nice, simple, practical example that illustrates it's a business network. It's a limited number of parties. You are sharing ledger information. You're not trying to run a credit card switch. You're not trying to do any of that complicated stuff. So we got value within 2 months of implementing that. The next projects you may hear about, since we're in Asia Pacific, Monetary Authority of Singapore is really big on this for various reasons. Step 1, there is a joint Hong Kong Shanghai Bank, Bank of America, Monetary Authority of Singapore, and Development Bank of Singapore project for trade finance for all shipping in and out of Singapore, which is a major hub. That is then tied back to the ports of Singapore, managing all those ships coming in on a blockchain. An interesting example. Next, MAS is looking to have a Know Your Customer blockchain for the entire state of Singapore. So there will be no confusion about who anybody is, because they will then enable digital identities, which is critical for the development of the types of digital applications we've been hearing about for the last 2 days. And maybe blockchain is the way that we will get KYC. The Australian government is already asking for, through the Reserve Bank, to take a look at a KYC on the blockchain for Australia. KYC being such a critical issue because it will kickstart the e-commerce economy, which simply is not going fast enough in many people's opinions. So what is it about blockchain? As I said, you've got a shared ledger. This is our point of view. So remember, we're talking about private, missioned, distributed ledger blockchain. So first of all, it's a ledger. It's about numbers. It's about money, okay, at this point in time. I'll give you some other examples for fun. Secondly, it's about privacy. That means in order to participate, you have to have access because it's permissioned. which means an access digital certificate, which identifies you as whatever type of participant you are. The second thing is a transaction certificate so that you can actually have a thumbnail signature on your block when you create it, so you have non-repudiation of the transaction back to the person who put it there. Not only can you not change the record, but you can't change who actually did it, which is very important, as we all know from financial services. It's based on consensus, so that we all agree who participate in that this was an effective transaction, etc. It is not by proof of work, as in Bitcoin, but is more likely to be a variation on practical Byzantine fault tolerance, which is very similar to what tandems use today in tell me 2 times FPOS systems. Last but not least, and I did want to spend a minute or two on this, is smart contracts, which is a term I do not like at all, because it is not a contract. What it is business rules based on a business rules engine for an event-driven activity. The best example is a demonstration we do on cherries. Now, for some reason which remains a mystery to me, since I am a migrant to Australia, the first box of cherries from Tasmania is a very special social event in Sydney. And the first box arrives at the markets, and of course, it gets auctioned off for charity, and people pay unbelievable amounts of money for a box of cherries, right? Okay. So there's a very interesting concept where you tie blockchain back to the Internet of Things. So you actually have, on that box of cherries, a temperature sensor and an RFID type tag. So as that box of cherries leaves the orchard in Tasmania and goes through all of its steps, the sensor is checking to see what the temperature is, because the contract, the real contract, which then is instantiated in the code with the business rules, says that it cannot get above 4 degrees Celsius. And so it goes through each step, and if it makes it all the way to the end, the smart code goes, yes, everything was, the chain code goes, yes, it stayed under 4 degrees, take the cherries. If it went above, little red light starts flashing, we have a problem here, inspect it. A very simple use case. The other use cases which are very similar are called provenance, which is the one that I think is going to be huge in New Zealand. It's the one that Walmart is doing with Tsinghua University and IBM in China right now, which is to prove that the pork that you buy at Walmart in a Chinese supermarket came from some place where they actually fed it properly, did not have too many antibiotics, etc. And so what you actually have is the proof of where it came, which some people call field to fork or paddock to plate. This is going to be enormously powerful for people who are in the business of agricultural produce and wanting to prove where did it come from, was it organic, were those calves really massaged by hand with Kirin beer, all that sort of stuff that people pay a premium for. Very important. And this is all aspects of blockchain, so a bit different than the conversation we had before. Then IBM works a lot with the Economist Intelligence Unit. And so we just did a study of 1,200 banks around the world, and financial institutions, financial markets institutions. What do you guys got to do with blockchain? Always good to ask people. And this is what you get. So not many people, everybody's kind of looking at safe bets in here, okay? A lot of which are interesting, right? So some we know is going to work for sure. Like reference data between a limited number of parties, absolutely no problem at all. Trade finance, that's the big one everybody's looking at anyway. Corporate lending, maybe, right? These are all personal opinions. Consumer lending, not quite sure what that means, really, to be honest, on a blockchain. And deposit taking, retail payments, I don't know. So, but this is what they thought. Then we go and we ask, what are the trailblazers or the leading edge guys or whatever you want to call them, the avant-garde, what do they think they're going to do? Deposit taking, mortgages, retail payments, consumer lending, corporate lending. This is what people say they're going to do, right? What we see them really doing are things like you've got digital asset holdings at DTCC and ASX. You've got CLS doing a specialized kind of netting for non-CLS currencies in New York and London. You're seeing people do bank guarantees are now starting to come to the fore. Nostra and Vostra accounting for correspondent banking, where you actually can sync your ledgers. So the image in my mind is always, how do I sync these ledgers for Nostra and Vostra accounting, correspondent banking, they send ships full of gold bars back and forth, to reconcile, but it actually doesn't work that way. So the reality is people are looking at this, and I think it's time that New Zealand had a look and thought about how can New Zealand participate, whether it's financial services oriented, it's agriculture supply chain oriented, whatever it is, how can you start thinking about doing this? So we suggest a couple of things. First is, people are actually looking to implement and do stuff now, and I am in serious conversations in Australia with at least 2 financial institutions who want to do something serious, which is none of the things I discussed, right? But they see as being potential ways of providing new offerings or capturing more market share. The second thing is to form partnerships. There are other blockchain people in this room, right? An ecosystem for blockchain, a New Zealand ecosystem for blockchain, where you have the Blockchain Association, you have the fintechs, you have the banks, you have your large customers, you even have retail customers, all coming together to take a look at what are the options and would it make a difference, okay? And then consider some investments. Now, we're in the business of helping people do this. So we have run in Australia and are running next week, together with the Monetary Authority of Singapore, big blockchain hackathons. We ran BlockHack 16 with Westpac, University of New South Wales, Capgemini at Stone and Chalk earlier this year. We have run blockchain hackathons at ANZ. We have run pilots with Ripple for cross-border remittances and related correspondent banking. We would love to work with you here to be able to do this. And the best part is the first one's free. So what we do is we bring our resources, leveraging our sandpit environment, which is available, called Bluemix, from which you can download, as part of that hackathon, the 4 key assets from the Open Linux Foundation to enable you to do blockchain proofs of concept. This is the best way to find out, right? So my recommendation to you is, let's take a look at how do we apply these 4 levers to New Zealand to transform and come up with a services-oriented architecture which enables 2 banks to talk to each other either through the API economy or through blockchain, or more likely both, as well as other means, so that you wind up having an integrated systems-oriented architecture for payments, which will enable you to have the end-to-end experience, be able to grow your payments business, to understand your customers of all types, and be even more successful. So in closing, our recommendations are to drive superior customer experiences. That is the key. So we believe that you need to, as we saw today, rival the best digital companies with your front ends. You need to apply the principles of design thinking. This is what's dominating the world right now, designing for the end user. We've always said that. Now there are formal principles, mechanisms, and tools to enable you to do that. You want to be able to do this across all of the channels and reduce the friction when the customer initiates something with you through the payment or other mechanism. I suggest in order to do payments conversion, you have a really hard look at ISO 20022, and is that going to apply both within the bank and without the bank, either or neither, right? This is going to be a very important architectural decision for every bank and financial institution in this room. Be able to have the common rails of processes and the underlying SOA architecture so that you're not doing the same thing 3 different ways inconsistently. One way for cards, debit, one way for cards, credit, another way for direct entry, and another way for wholesale payments. It's a waste, but it all grew up from silos because of history, and we all understand that, so no blame. To actually take advantage of having done that to get the data and use the data. You have the best data in your bank, in transactional data. You do not have to go surfing the internet to find good data about your customers. It's sitting right there. All you have to do is use it. You also can use that data to start understanding counterparty risk better, to start understanding when you're going to need liquidity and how are you going to get that liquidity, to be able to do fraud and AML processing. And last but not least, to be able to position yourself to partake in the new ecosystems. The new ecosystems which include your existing customers, which include other people's customers, which include other people, and which include fintechs. So IBM would suggest to you that this is the best time to be in payments, right? Whether it's 25 years, 30 years, 40 years, I bet you some of you have been in payments. It's the best time. Payments was the driver of change, and payments will be the driver of improved user experience and relationships with banks and their customers. Thank you very much.